Welcome to your Delaware Mortgage Rate Weekly Mortgage Market Update for the week of January 12th, 2015. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was another good rate for Delaware mortgage rates. They were able to move slightly lower. Take a look at the bond chart on the screen. The trend has been for mortgage bonds to move higher, which has moved interest rates lower. But last week we did hit a very tough ceiling of resistance. The last time we hit that, we were turned lower, and that's what happened this last week. We hit it, and then we were turned lower. But the bond is still near all-time record lows. So with that in mind, we're going to recommend locking your Delaware mortgage rate to start the week. Take advantage of this. That's a tough overhead ceiling of resistance to push through. So go ahead and lock in your rate on a purchase or a refinance. Now, if we dig into the big news last week, economic news was the release of the jobs report for December 2014. That was released by the Bureau of Labor Statistics, and it showed that 252,000 jobs were created in December. Now, if we look at the whole year, employers added 2.95 million jobs in 2014. That's up from 1.95 million jobs in 2013. So that was a good year for the labor market. The unemployment rate in that December jobs report dropped from 5.8% to 5.6%. So that looks like, all in all, good jobs report. But the labor force participation rate actually dropped from down to 62.7% and dropped to 0.2%. That shows that the unemployment rate dropped not because people went back to work, but because 300,000 people dropped out of the workforce, no longer counted in the unemployment rate, but counted in the LFPR. So that is not a good sign that we're getting lower unemployment because people are dropping out of the workforce. So we'll have to see how that moves and plays out. And then in other economic news, the price of oil continues to fall. We were down to about $48 a barrel last week. So that is definitely good news at the pump. You're seeing gasoline just continue to drop. But long term, if oil stays low, that's not going to be good for the economy because since the recession, the recovery, 40% of the jobs have been in the energy sector. So if the price of oil stays low, we could see the energy sector start to contract. And people start to get laid off as they shut down the shale fracking oil booms and some of the other stuff because the oil production in the United States is not profitable at $48 a barrel. So they can weather the storm for a while, but if it continues, they will shut down, and that will be a drag on the economy. And then we had weekly initial jobless claims come out on Thursday, and it showed 294,000 claims for the week. That was a drop of 4,000 from the previous week. And now that's the 15th week out of the last 16 weeks we've had jobless claims below 300,000. So that is some good news there on the labor front. And then we had in housing news, CoreLogic released its home price index for November 2014. It showed home prices increased 0.1% from October and are up 5.5% year over year from November 2013. Now, if you look at that chart on the screen there, you can see that home price appreciation has slowed considerably. Back in February, we were at 11.7% year over year. Now we're at 5.5%. That's not bad news, though, because that 11% was not sustainable. A year over year of 5% is definitely sustainable, so housing is doing good, and it's in a great range. Now, where are mortgage rates headed in 2015? Well, the prediction is mortgage rates are going to stay low for two reasons. One reason is we don't have any wage growth. That was shown in the jobs report as well. So no wage growth, no inflation. No inflation, no reason for the Feds to raise short-term interest rates. And we're also going to see foreign investors buying our bonds because of the strength of the dollar. As the dollar strengthens, they're going to invest in our bond market because they get a bigger return when they transfer the money back to their own dollars as the dollar rises. So that's going to keep mortgage rates low throughout 2015. So that means it's going to be a great time to purchase a home. And then some great news from FHA. FHA released that they are going to reduce the annual mortgage insurance premium charged on all FHA loans with a term greater than 15 years. So they're cutting it by 0.5%. That'll save home buyers between $80 and $100 a month because of the reduced monthly mortgage insurance premium. Now, if you currently have an FHA loan, it's a great time to consider a Streamline Refinance. That's where we can drop your rate. And now your mortgage insurance with no appraisal, no income check. Just a credit check to make sure the mortgage has been paid on time and that you have the minimum score. So if you want a no-cost analysis on that, give us a call in the office, 302-703-0727, or you can apply online, PRMIDelaware.com. Now in the local news, the next free first-time homebuyer seminar is this Saturday, January 17th from 10 a.m. to noon in Newark, Delaware at the Christiana Hilton Hotel. And then the next one in Dover is going to be March 7th. That's a Saturday, 10 a.m. to noon at the Dover Holiday Inn. You can register for either one of those events. We give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.